Good morning and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Matthew in real life and Blind Run on the internet, and today we're going to be talking about Bitcoin volatility. It's pretty much since June been, well, less volatile than any other asset in existence, including gold and silver, which is odd. It's very odd. It may feel like it to you that Bitcoin's been extremely volatile, but if you look at it overall, it's been sitting between the $18,000 and like $22,000 range for a few months now, while pretty much the entire rest of the market is all over the freaking place. So we're going to take a look at basically some technical indicators, some trading analysis, some technical analysis, however you want to say it. I don't like mixing up technical and trading together personally, but I know like TA, whatever. That being said, we're going to be taking a look at it because there are some people that are basically expecting volatility to return to the Bitcoin market. And if that's true, it could be a positive sign. Do I think that's going to happen? We'll get into it a little bit later. Let's also talk about Kazakhstan and some more legislation going into place in Kazakhstan. Of course, that'll be extremely important with the relations with Russia and cryptocurrency mining. And I suppose at the end of the day, some hash wars, if we're being completely honest. Then we're going to be talking about the new 4080, 16 gigabyte and 12 gigabyte benchmarks, because those have been released by Nvidia. And of course, you guys should be fully aware of everything that's been going on with the 4090. The launch was today. Unfortunately, I will not be able to pick one up. We'll talk about that too later. I do need to do some videos over on my Blind Run channel regarding content creation, some of the stuff I've learned, some things that are probably like not beneficial depending on like what type of creator you are, and some stuff like that. I think I've learned a lot, especially the past 3 months. I've been essentially permanently sick for the past 3 months too, which has not been helpful for a lot of what's going on, but we'll get into it. Let's talk about as well, Handshake node is going to be available on Flux, the Flux marketplace, and Elysium release candidate is now available. That's going to be the tokenization layer for Firo, as well as you will be having the option to stake CNETA on the Cardano mainnet coming up here on October 16th. So we have an announcement for that as well. Before we get into it though, let's go ahead and run a little spot from our sponsor. If you guys don't mind clicking the link down below, check it out, and then we'll go get into the show right after that. Today's sponsor is BT Miners. Purchasing mining equipment online can be dangerous. With all of the fake storefronts and scams, it can be hard to find a reliable source. That's why when BT Miners reached out for a channel sponsorship, I started by verifying that ordering and delivery went smoothly with the purchase of my own. If you are looking to purchase ASICs hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners is a trusted source by both ASICMinerValue.com and CryptoMiner.com. Follow the affiliate link in the description and tell them SOT sent you to support the channel. And welcome back, ladies and gentlemen, boys and girls. I'm going to check something out here real quick. I want to make sure I have these settings correct. Yep, okay. All right. It's public. I don't know. I mean, we do know it's over. It's just not very fun to accept now, is it? All right. So first things first, we got the Aneta BTC announcement for CNETA staking that will launch on the Cardano mainnet on October 16th. Via this tweet, so you guys can go ahead and check that out. The link is down in the description. Not much to say here. Obviously, if you want to stake a single coin, you do risk it for the biscuit, meaning, yes, there is potential for, returns as well as potential for passive income, but you are reliant on a single project and its success, and therefore it is a little bit more risky than I would be comfortable with usually. Right now, I have staked some over on ErgoPad. And I'll actually show you guys this right here, because this is a great example of the volatility within it and the fact that, like, once you're locked in here, you're kind of stuck, right? So if I go to my dashboard here, I'll show you guys right here. As you can see, here is the ErgoPad original stake, what it was at in March 14th of 2022, over $10,000, and its current value of basically $625. So clearly, and obviously the whole market has similar, essentially similar looking metrics. It's not to say that this is specifically, bad on ErgoPad. It's just to say, like, if you are going to be staking, these are the types of things that are going to happen. And now I'm, essentially, dependent on ErgoPad to be successful in the future. Will that be the case? I don't know. We'll have to find out. Now, let's go ahead and talk about Flux and the Handshake. So if you guys aren't familiar, Handshake is an ASIC mineable coin, and they do have nodes, obviously, for their network, and you can now deploy those nodes on Flux. So Flux's core values and ethos is the rise of Web 3.0, by and for the people. Evoke the power of corporations and restore it to the common people. The Flux cloud is decentralized based on thousands of single servers from all over the world connected in one operating system. Individuals are the backbone of it. They provide the cloud with computational resources via home-based bare metal machines or rented servers and get incentivized by 50% of the total block reward. To this date, the decentralized cloud of Flux is supported by over 15,500 nodes all around the globe. Its available computational power resources total over 100,000 cores, over 275 terabytes of RAM, and 6 petabytes of solid-state storage. Now, it is important to note, guys, that not all RAM and not all cores are created equally, right? But that being said, it is impressive. Moving down, though, what we're really interested in is, I guess, the node for Handshake. So let's go ahead and get into that. So it says, let's proceed with the guide on deploying your own Handshake node via the Flux marketplace in a few steps. And essentially, like, you guys can go read the guide if you want. This is more of an announcement on the channel of it. We have done guides for, essentially deploying different apps through, not through the marketplace, but through runonflux.io. We've done custom apps, both for Minecraft as well as for V-Rising, I believe it was. So you can obviously go in and do just a marketplace app, which is the easiest, and spin up a node. Nodes are going to decentralize the infrastructure. If you wanted to set up a way to mine to it, I guess there's probably potential there. I'd have to check. But, if you're going to mine to a node, it's better to run it on a local network. Is there really any advantage for an individual to run a node like this? And, that's a fair point, that, like, there's not really any monetary benefit for you to do it. I mean, the best monetary benefit is solo mining, and you really want to keep your nodes on a local network that's close to your miners if you're going to do that. So it's really cool that you can do it. Would I suggest paying money to do it, as you would need to do if you're going to spin up a Flux node? Not necessarily, but I do like that there is the option there. It's an easy option to further decentralize the network for Handshake. Awesome stuff as far as that's concerned. From a financial perspective, it doesn't make much sense, though. So that's kind of the point. Okie doke. So Firo now. is releasing essentially a tokenization layer. This seems like, oddly enough, layer 2. Is that better? No, too high. I don't know. Now the button quit working. All right. Anyways, so now the light's too bright and the down button doesn't work. Now, okay. Anyways, let's get back into it. Elysium is a tokenization layer for Firo. It sounds like layer 2 to me. Let's go ahead and hop into the details. And that's at first glance, right? Let's hop into the details and see what they're doing here. All right. So Elysium, our asset tokenization layer, is now in release candidate status and is open for public testing. Release candidate status means that while the code is complete and fully functional, this is the final testing stage before an official release. Elysium is Firo's tokenization layer that provides a platform for anyone to create their own custom tokens. These tokens enjoy all the privacy advantages of Lelantis technology at a protocol level and low fees. Fees for transacting with these tokens are paid in Firo that have been anonymized using Lelantis. Right? Unlike other tokenization platforms, the fee payer's identity is hidden when transacting with these tokens. Now, there are different solutions similar to this out. So, to say unlike any other tokenization platform, I would, I'd reserve that. I'd say unlike any well-known tokenization platform, sure. But to be clear, there are platforms that are working on specifically this, right? The payer's identity. The tokens are by default sent using Lelantis technology and are anonymized when received. Anonymized. There we go. I can do it today. Some of the potential use cases where Elysium can be used are anonymous voting tokens, private stablecoins, asset-backed tokens, and fun meme or community coins with privacy. The launch of Elysium expands the use cases of Firo not only to be a privacy coin, but also a utility token for a privacy ecosystem. Our partners at .oracle are working to bridge assets from other chains into Elysium to take advantage of the privacy features that Firo has with cheap fees. Using .oracle, you can bridge ERC20, BEP20, TRC20, ETC, which technically is still like ERC20. So, anyways. And you can do that for tokens into Elysium to transact privately. So I guess you can basically, there's going to be a bridge feature with .oracle that you can do this for. It goes over the release candidate, where it is, you got it for command line only on Linux, or you do have, I think, some GUI version. It looks like here as well. If you guys want to go check it out, links are down in the description. Overall, I think this is pretty cool. I definitely want to check it out. Let me know what you guys think. I know that Firo has definitely left a bad taste in the mouth of miners. That doesn't mean that we don't keep up with the technology and make sure that we're aware of everything going on. You never know what could happen with Firo. I think it is also interesting just the manner in which some of these projects approach the way they change their monetary policy, etc. It's extremely important from a PR move or a PR perspective. And I think a lot of projects could do a lot better. Obviously, Firo being one of those in the past. Nvidia publishes official GeForce RTX 4080 16GB and 4080 12GB benchmarks. Huge performance gaps in the entire RTX 40 lineup. Yesterday, Nvidia published brand new gaming performance benchmarks of the RTX 4080 16GB and 12GB graphics cards. If we scroll down here, ignore a plaque tail. It's not a plague tail, it's a plaque tail. It is horrifying. The attack of plaque. within your mouth. That would be a terrifying game, actually. What if there was a game where you just went through as a little dude cleaning up plaque on people's teeth? Just think about that for a second. But ignore the benchmarks on the 4090 because it just shows 0, and then for some reason, this is some of the worst charting I've ever seen, to be completely honest with you. But 4080, 16 gigabytes, 66 frames a second. Is that right? Yeah. Well, let's just compare F1 because we got numbers for F1 across the board. 4090 at 79 frames a second compared to the 4080 16 gigabyte, which is at 57 frames a second. This is at, I believe, 4K native. Yeah. RTX 4080 12 gigabyte at 46 frames a second, and the 3090 Ti at 49 frames a second. This is just weird at the end of the day. $4K with DLSS, does it get even weirder? No, DLSS performs better as you would expect with the 480 12 gigabyte beating out the 3090 Ti. And then if you do, what is this? So this is ray tracing on and DLSS on, and then it has, okay, so gray is DLSS off, DLSS 2 is the light green or something, or the dark green, and DLSS 3 is the light green. But then it kind of shows where like the 3090 Ti in with DLSS off beats out the 4080 12 gigabyte. And then they do a Plague Tale. So here were the numbers for the 4090 on a Plague Tale. It just wasn't working up there for whatever reason. Once again, in native resolution, the 3090 Ti is beating out the 4080 12 gigabyte. I would like to see a competitive shooter title with traditional rasterization in like DX11 between the 4080 and the 3090 Ti, right? I mean, I'm sure we're getting that now with like some other guys, but like to me, whenever I look at this stuff, like I like to play 240 hertz 1080p. That's typically how I play my games. And I do that, you know, with titles like Call of Duty, Overwatch, obviously CSGO, Doom, all the shooters that I play as well. That's what I prefer. And what I've noticed is like the later in generations we get, the actual pure horsepower isn't getting that much better. We're just getting a lot of these, we're getting better lower level APIs, right? We're getting like Vulkan and DirectX 12, and like those are adding more features, which then are being able to be rolled into driver sets that are then adding this additional performance through features like DLSS, etc. But when you look at like the actual raw horsepower, it's not looking as good for Nvidia as it has in the past. That was through the 30 series. I'm kind of wondering where we're at with the 40 series, right? Especially when we have this launch of like 360 hertz, you know, monitors, right? I haven't tried the 360 hertz out yet. I would love to at some point. 240 hertz has been fine, but you know, I used to do 144. I thought 240 hertz was ridiculous, and then I tried it and I was like, oh, this isn't ridiculous. I love this. So, you know, I'm kind of curious where we're at there, and it'll be really interesting to see what the comparison between, for example, the 7000 series GPUs from AMD are going to do in comparison here too, because their traditional rasterization on like the 6900 XT and older titles and stuff was much better. Like the raw horsepower numbers were much better on the 6000 series than the 30 series. It's just you get, with Nvidia, you get a lot of proprietary BS that almost like, I don't know. It hinders AMD GPUs, even though in reality it shouldn't. at least what I've noticed over time. Plus, AMD and their driver issues in the past have been absolutely miserable, but we'll have to look more into it. I haven't gone over all of the 4090 reviews and stuff like that. Just haven't had time. Plus, I've just been napping a lot. Like already, I'm kind of exhausted right now. Not going to lie. The vid is tiring. So, crypto miner Core Scientific will defend its interest in Celsius bankruptcy. Core Scientific provides hosting services to Celsius Mining, for which it claims to be owed around $5.4 million. Crypto hosting and mining company Core Scientific has said it intends to pursue what it feels it is owed by Celsius Mining, the mining affiliate of the crypto lender. The firm said in a U.S. Securities and Exchange Commission filing on Wednesday that it intends to vigorously defend its interests and that it has retained legal advisors to assist with it with relation to Celsius Mining. There we go. I'm going to get it today. We're good, guys. It's fine. An adverse or untimely ruling by the bankruptcy court that provides Celsius the benefits to the company's hosting services without Celsius fully paying the costs of such services would have a material effect on the company's business, financial condition, results of operations, and cash flows, the firm said. Core Scientific provides hosting services to Celsius Mining, for which it claims to be owed around $5.4 million. Along with its parent company, Celsius Mining filed for Chapter 11 bankruptcy protection in the U.S. Bankruptcy Court for the Southern District of New York in July. Last month, Celsius alleged that Core was in violation of the automatic stay which Chapter 11 bankruptcy protection provides, which prevents any enforcement action or the start or continuation of other legal proceedings by creditors. Core Scientific disagrees with the allegations made and will continue to seek resolution from the bankruptcy court and payment of any outstanding amounts owed. Shares of Core Scientific were up over 1% at $1.29 during pre-market trading. And obviously, this is a sticky position to be in as Core Scientific. You think you are, hedged against the issues of a centralized platform like Celsius when you're dealing with mining, right? Like, if I look at this, like, personally, I'm like, okay, all they were doing was hosting Celsius's equipment, right? That's all they're doing. They don't have to worry about this other stuff going on with Celsius. It's on the mining side. They'll be protected. But no, in reality, what you end up having here is them being kind of screwed over by Celsius, regardless of the fact that they don't have any actual cash flows going into Celsius as an investment standpoint, right? Or the Celsius portion that was, the borrowing, lending platform with all of the fun APRs, then APYs, etc., that were extremely high. So it's kind of sad to see. I hope Core gets out of it what they need to here, because as you guys know, the big problem here is like the price of Bitcoin's way down, right? And the power is way high, right? Is going up. Now, they probably have some contracts in place that help protect them there with power agreements and all of that, or purchase power agreements and everything as far as that's concerned. But just floating the rigs and the hash power for Celsius while Celsius is going through basically a bankruptcy is probably not ideal, right? Well, obviously not ideal. It's who you do business with is extremely important, and I learned that, especially start to learn that through the bear market. I think you can start to see, you can start to funnel out, the type of people that are going to survive a bear market and the type that are not. And hopefully what that means is when you get into a position where you're ready to start working with people in the bull run, that you are able to pick more clearly people that were able to function during a bear market and so on. Like me last time, I had to take some time off and go work a day job. Not necessarily a bad thing, but, I wasn't able to just survive a bear market. So, I maybe you want to work with, you know, a Voss coin for your advertisement for the next one. I don't know. These are ideas. Maybe that's not a good example. I'm trying to think of a good example. I don't have a good example for you right now. We'll get into it and talk about Kazakhstan's legislature as they are pushing for new crypto rules right now. The lower house of the country's parliament has passed 5 bills relating to digital assets as the government seeks to tighten its grip on crypto activity, particularly crypto mining. So here we go again. More legislation coming in on this. Remember, keep this in mind because this is the interesting one, right? This is the one where we have money coming from Russia into Kazakhstan to help with power infrastructure, specifically to mine Bitcoin, right? So that's our starting point. That's the last thing with Kazakhstan mining, crypto mining news that we've talked about. So now that transfers into this, right? The Majlis of Kazakhstan, the lower house of the country's legislature. Not sure if I pronounced that right. Let's go get a pronunciation of this real quick. I would rather just learn it. How do we do this? Pronunciation. Here we go.
Majlis.
Majlis. That's makes a lot more sense than the way I tried to say it. I try to say it way too fancy, bro. The Majlis of Kazakhstan, the lower house of the country's legislature, has approved 5 new crypto bills. Russian news agency TASS reported on Wednesday, or TASS. The draft of at least some of this legislation was introduced only in late September, local reports show, indicating how quickly the new rules are moving forward. The bills address the issuance and circulation of secured and unsecured digital assets, according to I can't pronounce this person's name at all, a member of the lower house's Committee on Economic Reform and Regional Development. So this representative also said the bills were developed in pursuance of instructions from President Kassym-Jomart Tokayev on curbing problems related to crypto mining. After China banned energy-intensive crypto mining in that country, miners fled to other jurisdictions with cheap electricity, with energy-rich Kazakhstan becoming a main attraction. The country soon began to struggle with energy shortages, and authorities began cracking down on the mining industry. Since May, the government has required crypto miners to register their operations with local authorities. In July, Tokayev signed into law increased levies on crypto miners. Remember, basically, crypto miners pay 5.5 cents a kilowatt hour now in Kazakhstan, maybe even more, but mainly a majority of that, I believe like 80% of that or something, it's ridiculous, is taxes, right? So it made it a lot less enticing to build like mining farms in Kazakhstan. But, you know, what we do have, remember the Russian part here coming in too. Although the bills are still at the first stages of the legislative process, sources familiar with the proceedings have told CoinDesk that the legislation is likely to pass into law. So we'll see that coming out here soon. And it's really interesting. Everything going on in Kazakhstan is extremely interesting, I think, surrounding the entire market. Actually, just everything globally, right? Where we got interesting relationships between Russia and Kazakhstan there, as well as between Russia and cryptocurrency and Bitcoin. Definitely like Communist Party vibes getting in on Bitcoin and crypto due to sanctions. That whole entire portion of the discussion is extremely interesting. And I can't wait to see how it plays out, because I think that cryptocurrency, and especially Bitcoin right now, appears to be something that, due to its use cases, etc., has the potential to break down a lot of barriers. Now, it doesn't have the potential to prevent a nuclear war. Probably not, but, you know, maybe. We'll have to see how it plays out. Now, I'm going to point this out and then tell you guys that we're going to cover this later, because this is a very long post. And I do not want to cover it here. And we will be covering it on my Twitch channel later today. Okay. I'm going to link it in live chat. You guys can go read it, but this is essentially... Look, we've all heard the Ergo side because the Ergo side's the one that's yelling at me on Twitter nonstop and yelling at me in the chat over here nonstop. So I am fully aware of the Ergo side. I think that it would be unfit, and everybody's aware of my side, right? As far as Ethereum Classic, Charles Hoskinson, and Ergo goes. I think it's only fair that I link and let you guys be aware of Ethereum Classic side. This is it. It's Ergo, WTF. I don't want to cover it on the main YouTube channel, really. I just don't. It's extremely long. I think the important parts is that they do say they don't have any specific beef with Ethereum class or Ergo, and that they are, however, addressing this letter to the Ergo community and leadership. So if you are in the Ergo community, then I would, in good faith, read their side of the story. Okay. Let's get into mining profitability right after a word from today's sponsor. Today's sponsor is BT Miners. Purchasing mining equipment online can be dangerous. With all of the fake storefronts and scams, it can be hard to find a reliable source. That's why when BT Miners reached out for a channel sponsorship, I started by verifying that ordering and delivery went smoothly with the purchase of my own. If you are looking to purchase ASICs hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners is a trusted source by both asicminervalue.com and cryptominer.com. Follow the affiliate link in the description and tell them SOT sent you to support the channel. And welcome back, ladies and gentlemen, boys and girls. If we look at what to mine, guess what? Yeah, nothing on what to mine is profitable. On RTX 3090 with corrected hash rates for ZIL hash, Kapow, Firo proof of work, Prog, POW. I guess you're losing the least amount of money on Rio, which is quite interesting. Flux in second place at losing 27 cents a day after 10 cents a kilowatt hour. Conceal losing 27 cents a day, after 10 cents a kilowatt hour. Look, this trend, I don't know that we need to really hash this out, pun intended, because we're all aware of where the market's at, right? We scroll down, obviously, Ethereum Classics way down here at the bottom with Ethereum proof of work, primarily because the fact of the matter is there's a ton of ASIC hash rate, right? What did we learn? We did learn this. This is great. We learned that there was a lot of ASICs on the network. In fact, it does appear at this point that a majority of the hash rate were ASICs on the Ethereum network. So I think from a GPU perspective, I think we're good. Now, statistically speaking, and I do want to have the Hive guys on. I talked to them a lot at the mining conference, but we didn't get a video done. And I want to have a couple of them on a little bit later to talk about this. But I was asking what's going on with the GPUs or the mining farms and the GPUs. And they said the large farms just turned off. They're not selling their equipment. They're not moving their equipment. They just straight up turned off. The home miners apparently are continuing to mine, and that is 4 rigs or less. Now, obviously, what that put Hive OS into an awkward position. Look, Hive OS doesn't really go out to mining conferences. They haven't in the past. Why? Because they're GPU mining focused, or they used to be. They're trying to get into the ASIC market, right? That is what Hive OS is trying to do. That's why they're out there. They're out there because the conference I was at was primarily ASIC, and they're trying to shift into and push the ASIC side of things. their firmware, their software, their front end, everything to control ASICs. That's why they're out there. Why do they need to be pushing ASICs right now? Because the large GPU mining firms that were getting them the income that they needed, right, as a company, because they're free if you have under 4 rigs, right? They needed more people to come in for that. Also, I'll let them, we're going to talk to them about the new mining pools and stuff that they are spinning up and not spinning up, that sort of thing later on down the line. But suffice to say, what I learned from them that, appears to be true and as true as can be, right, is that the farms have just turned off. Now, maybe some liquidation starts to come. I think we talked about yesterday the potential for the market to bottom out. And we did miss this, so we'll talk about this in just a second because I think it's important. Which was the main topic of today, but this is going to fit in perfectly, right? So yesterday we talked about the market bottoming out November to December, like timeline, right? If we were looking at previous cycles and when the bottom would actually happen, we're looking at November or December. Seems about right. Super sideways pain for like 6 months, that sort of thing. And then a steep kind of bottom out, maybe with some volatility here, and then slowly start to recover over the next like 6 months to a year. Like I said, I don't expect anything to be profitable on the GPU side or even show profitability on what to mine until March of 2023. And then really, in reality, a lot of other people that I talk to, they're expecting September, like June to September. So why is that though? And then what do we have to worry about as well? So maybe I'm half correct, right? Maybe we start to see some of that in March come back, and then everybody kept their cards and a large farm turns on, right? I mean, we know at least 10 more ETH terahash, 20 terahash had turned back on and aimed at Ergo and then turned back off, right? When we went back down to 50. So we know there's some farms there sitting around that are just literally turned off, waiting for something to turn back onto. And so maybe in March we start to see that these big farms try to turn back on. It doesn't work. They turn back off. And then they start selling all of their equipment. The other thing when they could start selling all their equipment would be November and December. Chadwick was putting some good rules in chat. One of the rules is obviously not having any debt. How many GPU miners are over leveraged, right? We're seeing over leveraged Bitcoin miners, but it doesn't seem like GPU miners are over leveraged. Meaning, in general, right, we don't see them sell like this. Yesterday we saw, a Bitcoin miner selling off 3,400 ASIC rigs, right, S19s, to cover expenses. That doesn't appear to be happening in the GPU market. It seems like almost everybody in GPU market was at least prepared enough to have all the cards paid off and be able to just turn off and chill. So, I don't know. This is kind of what I was seeing. But there is a chance for volatility to come back into the market. This is the main topic of the day. Bitcoin technical indicator signals big moves, with some traders getting ready to sell volatility. Bitcoin traders will soon get the one thing they love the most, market volatility. That's the signal from a technical indicator called the Bollinger Bandwidth, which is used to gauge periods of high and low volatility and shifts in volatility trends. The indicator is calculated by dividing the spread between the Bollinger Bands by the 20-day average of the cryptocurrency's price. Bollinger Bands are volatility lines placed 2 standard deviations above and below the 20-day average of price. The bandwidth falls, indicating low volatility when standard deviation bands contract. On the flip side, the bandwidth rises, implying a pickup in volatility when the bands expand. Volatility is said to be mean reverting, which means periods of high volatility are often followed by dour price action, while a low volatility environment usually ends with increased price turbulence. Since the end of June, the Bitcoin market has seen a volatility meltdown, with the bandwidth indicator falling from 0.76 to 0.08, the lowest since October of 2020. Therefore, a big move in either direction appears overdue, more so as historically below 0.1 readings on the bandwidth have marked an explosion in price volatility. Now, if we're talking about moving up and down, and we're okay. So from a technical analysis from traditional markets, which I think is extremely important to point out, because if we look at like what's been going on with Bitcoin over the past 6 months and what's been going on with traditional markets, me looking at it zoomed out, they're not related near as much as we thought initially with the recession and inflation, whatever else. But if we were to take this analysis and combine it with the analysis that we read yesterday over essentially the bottoming out being in November or December, it's not unrealistic to say that this price volatility will move in the negative direction. So the price of Bitcoin being decreased significantly in November or December. Right? That's kind of what we're looking at. Now, the article does go on to point out what we've been talking about for a long time. Bitcoin's been trading in the narrow range of 18,500 to 20,500 for nearly a month. And according to some traders, it's probably too late to bet on higher volatility because options or derivative contracts offering protection against rapid price moves in either direction have become expensive. So when anticipating a big move in either direction, sophisticated traders build a net long volatility portfolio so that their investment value increases when the price movements become rapid. One common strategy employed by seasoned traders is to buy options, either a call or put or both. That's because a pickup in price turbulence has investors scrambling for hedges. That boosts demand for options, making them pricier. However, most traders do so when options don't look cheap, a situation where expected or implied volatility already priced in the options market is lower than historical or realized volatility. Meanwhile, traders sell options when look expensive, a situation where implied volatility is greater than historical volatility. At press time, short duration options appear costlier, with the 7-day implied volatility greater than realized volatility. More importantly, the gap between the two, known as the variance risk premium, has recently widened. This would be a better time to sell volatility than bet on volatility explosion higher. And that's the CEO of options analytics platform Genesis Volatility, and he told that to CoinDesk. The variance risk premium has grown bigger, and so options are still more expensive despite overall volatility being lower. Mark Thielen, head of research and strategy at crypto service provider Matrixport, said markets are overestimating a pickup in volatility in the crypto market following the release of the U.S. inflation report on Thursday. This year's Ether has declined 1.5% on average in the week after inflation releases. The options market is currently pricing a post-inflation of +5, -5% in Ether, Thielen said. I would argue that the market is overpricing expected volatility, and so I would be a volatility seller here. My favorite trade is to sell Ether, $1,200 on October 21 expiry, put, and sell the Ether, $1,400 October 21 expiry call, Thielen added. Traders sell call and put options when expecting a range-bound market. So there are opposite sides to this both ways. I think the most interesting prediction, right, and not financial advice, I just think it's the most interesting one, would be A big move in either direction being overdue, along with the prediction that we were supposed to see a bottoming out in November or December of this year. So, we already checked out mining profitability. Let's go ahead and look at the networks. Take a look at the Bitcoin hash rate. $262 exahash a second, no real change. I expect most of this to remain the same compared to yesterday. 162 terahash a second on Ethereum Classic. 43 terahash a second on Ethereum Proof of Work. And 6 terahash a second on Ethereum Fair. We can look at Ravencoin, and we'll see about 17 terahash a second there. We can take a look at Flux, 8 mega solution. Oh, okay, we have a change, boys. It looks like Flux is down from 7. Well, no. Network hash rate's still 8. 8 mega solutions a second. It's just some misreporting on the pools. No real change there then. Take a look at Ergo, which is still sitting at like 52 terahash a second. And then we got Kaspa at 113 terahash a second. What else do we got, boys? I guess we could look at Radiant. See if it's gone down. Yeah, it's gone down. 18 terahash a second. Personally, I'm on ViperNet, by the way. I don't know if I can put my address in here. I can probably just click here. There's not enough. Was this my address? I think this is my address. Yeah, this is my address. Yeah, I mean 180 on the network. We can go look at it again. All right, so let's get into questions and answers for the day. Remember, super chats are never required, always appreciated. First to be answered, please hit the like button. We have 200 concurrent viewers and only 80 likes. If you guys don't mind doing that to help the algorithm out, and Lord knows we need it. But we'll probably just need a topic change. Just going to start talking about video games again. I don't know what to tell y'all. Let's get into it for the day. Simon says, as somebody thinking about getting Gecko Science Miner, your thoughts? I haven't heard of that miner, to be honest. Thanks for letting me know. I can try to Google it. It sounds weird. Oh, you're just talking about the little USB miners to solo mine Bitcoin? Yeah, play the lotto. Hell yeah. Have fun. Will you get the lowest power one? Yeah. Get like I think the cheapest, what is the cheapest one? Yeah, get like the lowest power, cheapest one. Oh no. Can you get the 130 gigahash still somewhere? I think the only one you can really get is the 300 gigahash anymore, right? For like 300 or less than 300 now. 225. Hell yeah, brother. Play the lottery. Have fun. Chris Hanley says, at Symantec, are there any nodes that can be run without crazy upload speeds? Most of the nodes don't need a ton of crazy upload speeds. It's just, if you're talking about Flux, that's a completely different situation. It's not really a node in the traditional sense. I kind of wish they would have called it something different. I mean, I guess technically they call them flux nodes to distinguish between them, but it's caused so much confusion in the actual function, how like blockchain functions for so many people that it's hard to make the distinction, right? Like people don't understand that flux nodes are not nodes in the traditional sense at all. All flux nodes do is provide processing power for their VPS solution, essentially. They're basically just virtual private servers hosted by individuals, right? And Flux is a broker between the renter and the seller. That's it. A node on a blockchain is there to provide consensus among all of the transactions and blocks across the network. Two completely different purposes. And it's caused a ton of, there's so many new people in the space that don't have a base understanding of what blockchain is that they get extremely confused by things like flux nodes. Understandably, because it is confusing. But just think of like flux nodes as a decentralized AWS or Amazon. Like cloud. Think of flux nodes as a decentralized cloud hosting platform. And then understand what nodes do on a blockchain is provide consensus across the network. Carson says, at Sunvatech, IBM stock has traded between 118 and 140 over the past 5 years with $6 annualized per share dividend and a 5.1% yield, saying BTC versus the stock market is apples and oranges. Well, of course, but everybody makes that comparison. So if they're going to make that comparison, and we compare it on a zoomed out look over on the Dow Jones versus the S&P 500 over the past 6 months, that is what we're talking about, and we clarified that yesterday. So, and the only reason we make that comparison is because other people make that comparison, because the actual question that we are trying to answer, if you followed, and maybe clearly part of the problem is it's hard to follow along because we do, however many shows, 208 of them. It's fair enough, right? The actual question, the overarching question that we've had for, since the inception of the show that we're always trying to track is Bitcoin a hedge against inflation or not? That's the question. And then to follow that up, to call me lazy on it, I would highly recommend you go through the 400 hours worth of content that we've done to cover this and get to this point before you call me lazy on it. Thank you very much. ER Ted says, at Sunvatech, most people think the 4080 12 gigabyte is the 4070. Sure. Right. Here's the deal. It just means we're going to have a crappier 4070, right? It just means that we're going to have a crappier 4070. But I think what the point was, to be completely honest with you, is they wanted something at a price point that would basically, well, actually, I don't know. Here's what I initially thought it was to have a price point that would push out the used market of the 3090 Ti. But then they did all that weird price manipulation stuff with the 30 series as reported on by Jay's 2 cents, and it's up in the air. Detroit Iris says, at Sunvatech, you should have asked Hive if they know what the Ferrari GPU's Hut 8 has. Yeah, nobody's going to tell me that. Right? There are probably so many NDAs surrounding that. And also, I don't know if Hut 8, do you know if Hut 8 used Hive OS? Thanks for the $1.99 super sticker, Chris. XRP the Goat says, hey brother, I've been failing to find flux settings for the 3070s. Do you have a decent overclock or as a starting point? No, not in a while. It should be pretty easy though to just go in and click the click it in Hive, right? Like Hive has them for you. There's plenty of people in here too that I can't get logged into mine. There's plenty of people. I just don't mind. Like the last time I mined Flux was so long ago, I don't remember those off the top of my head. I just don't. I mean, I would say it's probably 150 megahertz up on the core clock. You then take the memory. You probably just actually on Flux, you leave the memory alone at like 2200 to be safe. So 2200 megahertz on the memory plus 150 on the core and start there. That's where I would start at. Chad says, miss you, feel well soon, see you on Twitch soon. I wanted to stream on Twitch yesterday, but then I didn't, because honestly, I just, look, I'm like, obviously like the business and stuff is like not doing well. I've been sick for like 3 months straight. Like it's not that sick, luckily, right? It's just extremely annoying. I'm tired. I think it's been pretty clear. Depression, definitely. There's a lot of stuff going on. I'm hoping, yesterday I kind of just gave up. I just gave up for the day. I was like, I should stream. And then I was like, I just can't do it. I don't know why. I just couldn't do it. Any thoughts on dual mining right now? You're going to spend more in power. And I think that optimizing to utilize less power is probably more advantageous, just because you're like, right now, you're trying to essentially get to the point to where it makes more sense to mine than it does to just buy the coin and turn your miners off. Like, I think like as miners, that's where we're at, right? Like we're at the point to where we're just trying to get as optimized as possible to where mining makes more sense, or at least is the equivalent of purchasing the cryptocurrency outright. So if you're going to add dual mining on, that could maybe be the case, but a lot of the dual mining, triple mining stuff, first of all, you're adding in a ton of failure points, which means like you're adding in unreliability to the rig, which means that you're going to have to do more work. And what are you doing the more work for? Well, not for more money right now, right? So, and it's harder to optimize. It's harder to keep running 24/7. It's harder to keep cool. Like I just wouldn't stress yourself out over it that much, because the reward isn't really there, right? GamerKid asks if the USB miners work on Hive, and the answer to that is simply yes, but you will need to know how to use Linux command line. Perkster says, so a Flux node is not a blockchain, Amazon Play. No. How do we explain it? I don't know how to explain it. A Flux node, okay, I know how to explain it. A Flux node is this. I have this PC just running at my house, and you can use Flux to rent the power off of it to run something on it. That's what a Flux node is. That's all it is. I'm running a damn PC at my house, and you are paying me in Flux to utilize it to run something that you want to run. Whether that's a Minecraft server, a Handshake node, whatever it is, right? A node on the blockchain is just providing consensus to the network for the blocks that have been solved by a miner. Let's see, can we do paint? Let's do paint. Let's do paint. Maybe this will work. Is this dark enough? Yeah. All right, so we can do this and this and Flux. Come on, make the text larger. 144, baby. Flux node. And give me another one. Traditional node. I'm just going to call it node, but just know this is like your Bitcoin node. Let's just say like, yeah, Bitcoin node. So if you have, so all this is I have a PC here running, you know, got some RAM on there. You know, I got a CPU in there. I got some storage, you know. And somebody wants to rent, like this is the components of my PC. I load the Flux node software on there, right? And then all the Flux node does is present that to the network, to the marketplace. And then users come in, right? So how would we write this out? So PC, I load the Flux node software on there, and then the marketplace, and then the Flux node surfaces it to the marketplace, and then a buyer comes in and rents your hardware from you. A node on a Bitcoin network is basically you have a whole bunch of nodes, right? Let's just make nodes. And they all connect to each other. And then you have a miner out here, right? So a miner comes in and basically you have a two-way, right? So this comes in and this is provides work, right? Sends work in, W. The miner sends the work back and solves the block, right? Ding, now I get paid. Well, when the node, right? These are all nodes, whatever. Whenever the node from the miner gets the work in, right? Gets the solved block from the miner. Solved. I can't write with this, but block. Whenever it gets the solved block from the miner, it has to provide that consensus back to all the nodes. So all the nodes now reach out to this, and then they basically verify that the miner's not cheating, right? These are all connected, but so essentially a Flux node is basically two paths, right? At the end of the day, it's just PC to buyer, buyer to PC. The Flux node software is just running on the PC, and that is just surfacing it to the market. Those are all the portions that you have, but essentially it's a two-way street. There's nothing going on outside of it, right? I mean, there's some nuance to it if you wanted to get into like a more technical detail, but for the understanding of the people, like for just in general, so you understand the differences, this is what's happening in a traditional node setup, and it's very important to understand this for blockchain than it is to understand this. This just causes confusion. So why does this need upload speed, right? Which is really where the problem comes into play that everybody's talking about. Well, it needs upload speed because the information coming from the buyer is then requesting that your PC put out information to the internet, right? So and it depends on what type of work the buyer is trying to do. Most times, the buyer is trying to surface, a lot of times they're trying to surface stuff to the internet. They could be running a Minecraft server, which is pretty intensive on your network. They could be running a V-Rising server. They could be doing any number of those things as well, depending on how large your node is, right? So the thing is you have a little bit of RAM, a little bit of CPU, and a little bit of storage. However, if your PC or your node has like more RAM and storage and CPU than the buyer has, then you'll get a second buyer, right? So now, if you have more, like let's say you have like a larger node on Flux and you are able to support 2 buyers that are renting off your PC, it's going to up the amount of bandwidth that you're going to need, because you're basically going to have 2 applications now running back and forth. I don't know if that diagram was good enough. I probably should sit down and try to do a better video on explaining that and elaborating that for you guys. Daniel says, at Son of a Tech, it kind of makes me happy to hear that the home miners are the ones running most of the network. That's kind of the point of crypto, although I do feel bad for people that had to turn off. Well, right, so this gets interesting. I think we do go back to grassroots. I think it's extremely important that projects that are wanting to be successful understand that we go back to grassroots. And I do think that that does mean that any over-bloated or falsely bloated or increased project is going to have a harder time. So it's going to be really interesting to see what happens here over a little bit of time. But it can be exciting, because if we wanted to go back to the fundamentals, right? And let me make sure there's no more super chats or anything. If we wanted to go back to the fundamentals of cryptocurrency, and we wanted to go back to the idea of 1 CPU, 1 vote, then you would preferably have a lot less. But it all happens again. It just happens in a weird cycle. I just kind of wonder, as the more I think about cryptocurrency and then the problem and so first of all, the problem that is trying to solve, right? And then based on the fundamentals that are presented, I'm never really sure of myself that crypto is the way to do it. Like, if I'm being completely frank, I think it's somehow proven to be capable of doing it. Not just Bitcoin either, to be clear, because, I did sit down with a lot of Bitcoin maxis. I understand their perspective. And like I always say, I lean more towards, I'm basically a Bitcoin maxi with GPUs. But why am I a Bitcoin maxi with GPUs? Because I feel like Bitcoin has lost some of the fundamentals, right? Number one fundamental being 1 CPU, 1 vote. And so you end up in a position where you have portions and pieces of the fundamentals spread across different blockchains without one blockchain actually holding all true to all of the fundamentals. And by fundamentals, once again, like, to me, the reason why I'm GPU is like 1 CPU, 1 vote, and that's violated by Bitcoin, because at this point with ASICs, it's just whoever has the most ASICs. Technically, you could say that would happen with CPUs as well and GPUs as well, because it does. And it was happening. But it was happening a lot less than we actually thought it was, too, because it does appear that a majority of this was ASIC hardware on Ethereum, right? But given the chance, right? Now, Ergo had a really big chance to kind of do this fundamentally, but they backed out on it. Remember, originally it was going to be no mining pools. They had basically blocked mining pools. I think logistically that like the problem is if you introduce too much luck and then it's like, okay, no mining pools, but you just have one dude with 1,000 GPUs. Like, how do you prevent that? Like, that's kind of impossible to prevent. You know what I mean? So I don't know how you get past that. I haven't thought it up, but it is something that I think about every day, right? Zeigmeister says, or Zeigminer, excuse me. Newegg sold out of the A770 and 750 in minutes in a bear market. Yeah. I think we all right. How do I put this? So when we hit really, really, really good, not good times, I would say like bull run times, good times there. Obviously there's some issues going on, but let's say like the year 2020 and 2021. Overall, we look at it, what was really happening, a huge influx of cash into the economy, right? Basically, we locked everybody down, and then we gave them more money than they're used to having, right? Because the government was just giving people money, so they had this extra disposable income. And then there was essentially two people, right? There were the people that were trying to figure out how to make more money off of it and quit their jobs, and then there were the people that were just had extra disposable income. The first class of people are the people that are still trying to do what they're doing now to not go back to work. Meaning that I would postulate, is that the right word? And I know because I'm in the same position, right? I would posture that what you're seeing is two things, right? And because the lockdowns had a third effect too. But just as far as these two people, I think scalpers are still doing their job, which is trying to increase the amount of money. It worked in 2021, right? The reason it worked in 2021 is they were able to use their disposable income to invest in a product, buy it out to where there weren't any more on the market, and then sell it to the people that had additional income, right? The problem, third to that, right, that now we're starting to see is a supply chain shortage, or that we were seeing there as well. So that's basically means less product, so it makes scalping easier to do because there's less product to buy out to sell to people. I think we still have the shortage problem, but I think disposable income is going away due to inflation, basically caused by, of course, all the money printing we did last year. So I wouldn't worry about it too much because I think it's scalpers trying to hold on to a business model that will fail in 2023. I could be wrong. Chad says, that's Seven Tech really like the discussion on mental health. I think we should do more, especially lately. I've been having some issues. Chris Stewart said, the video is great video. Passed it on to my buddies that was having a hard time for sure. T. Scott said, I know you try to avoid politics. I talk about politics a lot, T. Scott. I do. I already talk about the culture war a lot too over on Twitch. So just follow me over there, man. Gandalf Gray says, Asymptech currently trying to get some CMP 90X HXs, but the guys for some reason doesn't want to do a listing on eBay again. Said he would do a wire. Don't do that. That's a scam, bro. Bro, that's straight a scam. Are the A770 drivers out for Linux? I don't know. As far as like, I'm out of money. Look, here's the deal. Conferences are a terrible idea. You have to be really rich to go to them or find sponsors. And if you don't do that, and then you have a sponsor also cancel on you for the month on top of that and not pay you out, you just end up in a position where you can't do the things that you're supposed to do for the month. And I made a bad move. You know, I don't want that to come out as, first of all, everybody I met there, super awesome, super glad I met them. It has nothing to do with that, right? It has nothing to do with the validity. Like if you're an ASIC miner and all you're doing is like big site development, sourcing equipment, sourcing transformers, if you're doing that, going out to a conference like that is awesome, right? You're going to meet people that are going to help you do that. If you're a YouTuber trying to cover an event, it just wasn't a smart business move for me, right? It was at the Kalahari, which was extremely expensive for hotel rooms. It was extremely expensive to eat there. You know, they covered my ticket, was super nice of them. And then there were like, you know, free drinks and then free food on Friday night. So I did go and I got free lunch on Friday as well, which is awesome. But everything is really expensive. So, you know, if I am completely honest, I think it was a mistake going. You know, hopefully we got a couple of cool videos out of it for you guys. But, you know, those videos, you know, what'd we make? $30 on the Django video, which is the only one that made money that we did out there. Yeah, that's not going to feed my family. You know, we would have done better staying here and working on videos, and we would have wasted a lot less money. So, I made a bad decision financially there, and I'll figure out how to recover from it. It's just like one of those things where I think you gotta be extremely, I gotta be a lot more careful personally. Perkster said, got it. Thanks for explaining. Yeah, I hope the node stuff explains more. Maybe I should do a full diagram at some point. I am going to call it here for today, though. Thanks, everybody, for hanging out. Over on Twitch. Here in a little while. I don't really know when. What time is it? Let's say noon, unless, I don't know. I'm going to definitely go drink a lot of water. Feeling a little dizzy. I think I'm going to be okay though. I think I want to cover this ergo.wtf video or article. I think it's only fair that we cover it. I don't know. Should we cover it over on Twitch? I think we should. Yeah, we're going to cover it over on Twitch. Yeah, I might take a nap. I don't know. We're going to do Twitch a little bit later today. But I need to also figure out what we're doing. I'll talk to you guys over on Twitch. I really wish, I don't know. I didn't, we got, yeah, I'll talk to you over on Twitch. I'll see you guys next Tuesday. Thanks for hanging.